Mhm. There we go. Let's put that here, that there, throw that here, put that there, here, and share my screen here. All right. Good morning, everybody. Good morning, and good morning, everybody. Hope everybody's doing great today. Happy hump day. It's Wednesday. Let me say hello to everybody here. We got Brian, we got Richard, we got John, we got Rick, we got Glenn, we got Omar, Heather, Vernon, Wayne, Dave, CJ, Julian, Dennis, Robert, David, Bancroft, Timothy, Wade, JC, HG. Good morning, good morning, good morning. Well, not good morning for you, good morning for us. It's almost time to go to, no, it's evening for you right now. It's like almost dinner time. Ed, Hari, Tom, Omar, Thomas, Scott. Let's see. We got a lot of people here. We got Murray. Good morning, Murray. Ew, it's chilly here too. Robert, Jody, Eagle Beagle, Ali's in the house. Cam, good morning, Cam. We got to invite Chip here more often. Bob, Ray, Colleen, the sassy trainer, Art, George, Henry, John, Rosalind, Steve, Armolfo, Darren, Lawrence, Dave, David. We got Dave and David. Richard, I hope you're feeling better today. I hope your blood pressure and whatever it was your. I hope you're feeling better today. Karen, how are you? Haven't talked to you in a while. Hope you're doing well. Happy New Year's. HG new. Oh, it's only noon here. Yeah, it's still early here. Yeah, I'm getting a little overzealous. Dr. Serena, good morning to you, and I hope your New Year's is going well. Let's give thumbs up to Dr. Serena, our actuary, who keeps track of the number of people here. And I don't see Bob here yet, but Bob's usually here. He gets everybody to hit the thumbs up button. Love it, love it, love it. Community, sense of community. Jeff, Scampy, Rice, Tony. Ooh, 17 degrees. Wow. In Albuquerque, who would have thought? Naples fan, Pops. Good morning, Pops. Eduardo, Kevin, Joe. Yes, please hit the thumbs up button. I appreciate it. Mark, good morning. Scott, we'll be starting in just a moment. I just want to give the room about 2 more minutes to fill up. We got a lot to talk about. We got bank earnings that came out. And Uncle Roger has his TC 2000 ready to go for the CPI report. So let me just give you the lowdown so far, okay? So far, JP Morgan is up about a buck, which is pretty good. I don't have I haven't got I don't even know if the company CEOs have given the statements yet, but so far so good. Citibank is up about two and a quarter, actually 257, about a little over almost 3%, which is good. And Wells Fargo, my favorite bank, is up also almost 3%. So we're getting a little bit of a tailwind from these earnings. And I mentioned to you yesterday that I really liked how they were starting to look. They weren't looking that bad. I said they weren't making highs, but I really liked how they were looking. And Citibank is now at a very long time high. Let's see here. Yeah, this is a good number. So I'll get into all the details. I'll get into all the details later today in the VIP room. I don't want to read and I don't even know if the CEOs have talked. If you guys know, if you happen to know, if you guys happen to know what the banks said about their defaults, I would appreciate it, but I don't know if they have or not. So just let me know. I'll read about that later. Remember, they came out with their earnings about 20 minutes ago, half an hour ago, as I was getting ready. So I wouldn't know yet. If you happen to know, if they mention anything about loan defaults, that's what I'm curious about. Please post it here and I'll read it for everybody else. Okay. So if you want to help me today, let me know about whether the loan defaults are increasing on any of these three banks. And just FYI, that's what you should be paying attention to. the loan defaults. Good morning, everybody. Now, let me give you guys a couple of links here. Let me give you a couple of links. So, today at 3 o'clock, I'm getting together with a couple of our other gurus, all the usual suspects. We haven't done a class yet. This is going to be an inauguration class to tell you what our plans are for the inauguration. Chris will be there. Gramster will be there. Kane will be there. There'll be a couple of gurus there. It'll be fun. We haven't done that in a very, very long time. We thought it would be really nice for you guys to see that. That's happening at 3 o'clock. We're not going to be selling anything. It's just going to be our favorite stocks for the inauguration. And here is the link to VIP room, which is happening at noon today. And my favorite link, and I mean this from the bottom of my heart, is Customer Service Live, where you guys can get all your questions answered that you try to get from me a lot of the times. And I'm just not able to answer because I'm not qualified. But these guys are qualified. How to set up the Pro Trader dashboard. Why are you not seeing the same things that we're seeing? Is my data off? These guys know what they're doing. And by the way, uh, financial stocks, very, very important for the stock market to make higher highs. Let me just say hello to everybody else who just came here a few minutes ago, and we'll get started. There's Robert. There he is. There's Bob. We got Mark, Scott, Lewis, Robert, Wayne, Rebecca, JB, Terrence, Richard, Debbie, Michael, Robert, Tim, Stacy, Susan, Deanna, Raj, Todd. And if I missed your name, I apologize. I'm not doing it on purpose. All right. Let's get this. Carlos says JP Morgan Chase, the bank reported a 9% increase in net charge-offs, totaling 2 primary attributed to the credit card business. Yeah, I want to see defaults. Let's see here. I want to see loan defaults, Carlos. Loan defaults for houses. That's what I want to see. That's the biggest factor. If people are struggling in the house, yes. Moondog is in the house. Hey, Dave. Hey, chat. Nice. Hey, Vano. Good morning to you. Okay, so let's get into the analysis, okay? So as you guys can see here, the Dow is up about 200 points and the NASDAQ is up 66 points. You might have noticed over the past couple of days, the RSP, the equal weighted SPY, has been holding on better than blue chips, better than tech stocks, the mags. And I warned you, and I didn't warn you. I told you that it's not going to be that way consistent. There's going to be a period where they start balancing each other out. Now, it doesn't mean it doesn't mean they have to balance each other out completely, but they should be much closer to each other than they were a few, going back. And I'm talking about this. Here, I'll show you what I'm talking about. I don't know why we have that here. Here, I'll show you exactly what I'm talking about. Look at the SPY. The SPY is now above the 50. Look at RSP. Look at RSP. The RSP is starting to come up. Yesterday, RSP was up 0.81. Look at MAGs. They were down yesterday. You see how this is coming down and RSP is starting to stabilize a little bit? We talked about that happening. Many times here. Many times here. So I'm expecting more of that, especially with these earnings on the financial stocks doing good. We should see a little bit of a rally, hopefully, in financials. I mean, I have to read the reports. I have to see what hey, Patrick, aloha to you too. And I think I responded to your email last night. Commercial real estate delinquencies up 11%. Most others are down 1% since last year. Okay, that's good. That's good, Angie. That's good. Not credit cards. No. Loans. Housing market. I want to see housing market. I want to see if people are not paying for their loans. Loan default rates, borrowing costs. I did say that. And I'm also saying right now that I think we will see. I don't want you guys doing a spread, but I think that if you were to buy, I think right now wouldn't be the worst time to buy the RSP and sell or If you want, anyway, I don't want to get into complicated spreads for no reason. Plus, we trade directionally here. I don't want to give you guys stupid ideas. I was just going to suggest a spread between the RSP and MAGs, but it's those pair trades always they don't they sound good on paper, but they don't do as well. So again, I'm curious about how the blue chips are going to react in light of RSP. So for the next few weeks, what you may want to really look at is MAGs, and I mean in the broader sense, kind of like this, the broader sense versus RSP, because if financial stocks do well, and remember, tech earnings don't come out for another couple of weeks, we may get a boost in the financials and healthcare and those type of stocks. Okay, so just something to think about. Okay, as far as Fed data today, we have CPI. This CPI will be very important, and we also have the beige book. The CPI is going to be really important, and I'm going to tell you again, there's only two numbers that matter. There's only two numbers that matter right here. Now, look at year to year. Last year was 2.7. They're expecting 2.9. This is consumer prices. Does that look to you like inflation's getting better? And I'm not going to get into it. I don't have the time today. But you could see that their expectation is exactly worse than it was a year ago. So, no, inflation is not getting better. And it's not supposed to get better according to them. 2.9 versus 2.7. So if this number is better than 2.9, we may see a rally. Ex food and energy core, this is what the Fed looks at. They're really bolted on 3.3. If this number's 3.4, 3.5, it's going to get ugly. It's going to get ugly. So far, so good, but it's going to get ugly if this number it starts getting. So keep an eye on these two numbers. I don't care I don't even look at these numbers. If you asked me, if you put a gun to my head and asked me what the month to month numbers are, I wouldn't know where to start. I don't look at them. I don't pay attention to them. And I couldn't care less because they get revised anyway. We only care about the core and the year over year. Everything else doesn't matter. Again, this is already disturbing, the fact that they're baking in a worse number, a headline number. The Fed looks at core though. They don't really look at this one too much. They look at core. So God help us if this number is 3.5 or 3.4. As far as earnings, we had Citibank, JP Morgan, Wells Fargo. I don't know if Schwab comes out before the open or after. I'll take a look right now real quick just to see if there's a reaction. Let's take a quick look here. I know you guys want to see it too, so we'll do it together. I don't think they came out with anything yet. And this one did. Oh, nice. Up 33%, BLK. Very nice. Very nice. So we're definitely gonna get a nice little boost with technology with financial stocks. And folks, believe it or not, financial stocks are very, 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 very important to the economy. If you don't see the if you don't see big large cap financial stocks making 52-week highs, it's very difficult for the stock market to continue going higher. Okay. We have not seen many rallies with financials. I'm not going to say leading, but at least being a big part of it. Look at this. US dollars coming down 2 days in a row. Now, we have a very strong trend here, and we're still at the 8-day EMA. As a matter of fact, we're right at the 8-day EMA. So this can just pop right back up. And look at how strong this trend is. My point here is we're down for 2 days, but I wouldn't be counting my chickens just yet. The chickens haven't. I wouldn't be counting my eggs just yet. You know what I'm saying? The chicken hasn't hatched. Jacques, good morning. Kevin, you can ask me questions. I don't bite. So again, this is still a very strong trend. This is still a very, very strong trend. So I wouldn't be saying that the trend is over just because 2 days. I mean, it comes down 3 days, and then it comes right back up. But with that said, the bond market is higher. Bond market's a little higher, offsetting the U.S. dollar, giving gold a little bit of a boost, because we know that the U.S. dollar has a negative correlation to the gold market, and it has a negative correlation to the bond market. So if the bond market's going up, the US dollar is going to cool off a little bit. and it's going to give gold a little bit of a tailwind. Remember, gold is still at our first trend line. No soup till we get to 27.82. By the way, I got a nice gift from Etsy. I got two T-shirts, brown T-shirts, but it doesn't have the name of the person who sent it to me. It was from Etsy. It was a professional risk taker. If you send me the shirt, first of all, thank you. But second of all, I can't thank you because I don't know who sent it to me. So whoever sent me the two shirts that I got from Etsy, from the professional risk taker, please announce yourself so that I can thank you because I don't have a, it doesn't tell me who sent it to me. All right. So just remember that. Sorry, I didn't mean to interrupt the show with that, but please let me know so I could thank you. Crude oil. Crude oil is looks like it's just consolidating here, which makes sense. I mean, look at this rally. We're still above the trend line. I still like Oxy, and I'm looking for reason to get bullish on energy stocks. So far, the only one I really like long is Oxy because it's above key areas. I'll show you why, actually. Because we broke the 100-day moving average, and you have up to the 200-day, and it's got a nice little trend. The question is whether it's going to continue, and that's going to be dependent on crude oil. So keep an eye on crude oil, and if we peak out here, one thing I do want to warn you about, we previously had a resistance area here. Here, let me, excuse me. So we got to get above this level. There's a lot of resistance here. Look, see that? See this? There's three levels here. We got to get above this level. So for now, thanks, Murray. So for now, I don't, we have to be careful because if this doesn't go up, it's going to be very hard for Oxy to go up. Be careful with it, Eagle Beagle, because as I said, we have resistance here, and we have very strong resistance here. And if we break this level, we can go higher, but we need to break this level. This is a multi-month trend line right here. So we really do got to break it. Okay? Be careful. Be careful. Okay? Be careful. Also, I hate to say this, but a rise in crude oil is an inflationary sign. Also, crude oil tends to move up in January. So my suggestion would be to keep an eye on the US dollar. Okay. If the US dollar starts cooling off a little more, we can easily get more upside from crude oil. But I would be very cautious right now. And I would be very, very nervous right now about my Oxy position with crude oil being at this level. So just giving you guys heads up. All right. As I mentioned, gold is emboldened. It's shinier today. I'm watching this show on HBO called Deadwood. A great show. It's my second time watching it, and it's about this town gold discovery in the 1800s. Really great show. Old HBO show. Anyway, just reminded me of gold. So yeah, we don't want to do anything with gold till we get to the 2780 level minimum because we need to break this trend line here, and then we have more upside here. Expect default rate to drop by 1%. That's good. That's good, Angie. That's good. That means, folks, remember, if default rates are down, that means people are still, shopping new homes. They're still in that cycle where they buy a new house and they buy things for the house and things like that. So what I was concerned about was whether the very sharp raise in interest rates in the last couple of quarters are biting people in the ass. It is a bummer, Cam. It is a bum. So it is a bummer. So that's kind of what I'm concerned about. That's so if bank stocks are doing well and if loan defaults are not rising, that means people are still happy and they're still buying. They're going to still spend money on other things other than houses. If people can't afford their houses, then they're going to start not buying things that go into the house, cars, furniture, all these things. So the reason I asked about the reason I asked about the default rate was not not so much that I could measure how the stocks are doing, although that's also obviously important. But I kind of wanted to know what, because these banks like Wells Fargo, JP Morgan, they're big lenders. So we needed to know weren't mortgage defaults. And I'm not seeing it. I'm not seeing any monkey business. Not yet, at least. So just giving you, hey, again, I'm just giving you heads up. I haven't read their report yet, but I'm assuming if all these banks are doing well, it's probably a good sign. And we'll probably see some upside today. I told you guys yesterday, I feel like the market wants to go higher. The market didn't feel like it wanted to go lower the last couple of days. Didn't have that feel to it. China is up a hair, not really all that much. Nothing really crazy here. We're still in this range. They're not really helping or hurting us right now. They're just kind of not here, not there. Okay. All right. Let's tie in everything together and then we'll start talking about stocks and the stock market. We've kind of talked about the broad market. Let's put everything together now and wait till I show you some momentum stuff. You guys are going to like this. So investors are looking ahead to key U.S. inflation data, which is coming out in 9 minutes. I have the bond market ready to go. We'll see how that could really roil things for us, but not. Employment and default rates tied together. Of course they are. And employment is very strong. And we haven't had defaults. That's good. That's good. That's bullish. United Rentals climbed nearly 6%, top percentage gainer on the S&P 500. United Rentals. It's funny. I was watching the market yesterday, but I didn't even get notice on this. So we'll take a look at it today. KB Homes gained 4%. Home builders posted upbeat results and solid guidance. That's good. But again, they issued their guidance at the same time that they issued their earnings. Not as sexy. Not as sexy. Now, you want to see something sexy? This is sexy. Lilly slumped 6%. Top loser. Why were they the top loser? Because they gave themselves a negative guidance and earnings don't come out till February. Do you see the power of a company? What happens when a company lowers or raises their own guidance? Now, I didn't know. I follow a bunch of traders and I see what they're doing during the day, and because I want to make sure that I'm doing, that we're all seeing the same thing. And a few guys were trading yesterday, Lilly, to the short side, but I didn't know why they were doing it. I didn't know it was because of the. I thought it was just because the stock was being broken down. I didn't know it was because of the news. Had I known, I probably would have taken a position. But keep an eye. We could still go down. But the biggest mover, folks, the biggest catalyst for a stock is an earnings upgrade. The biggest catalyst for a stock downside is an earnings downgrade, is a revenue downgrade, not during earnings. Just, hey, by the way, we wanted to let you know we're doing a lot worse than we thought we were doing. For a company to say that, which is what they did yesterday, that's very damaging. That means they really must be doing a lot worse. Okay. Yeah. Goldman Sachs too. I looked at it this morning. So TLT's up. Default lower. Oh, I'm missing a good conversations here. All right. So remember, nothing more powerful than a company giving themselves, not a third party, the company themselves, and not during earnings. Okay. Just remember that. Thanks, Bob. We had PPI yesterday. You saw that PPI was not great, weaker than expected, was unchanged. Basically, the number wasn't great, and the market didn't know what to do with itself yesterday. It's like all over the place. We had financial earnings already come out. According to Bloomberg, companies in the S6, this is a number you need to write this down. You see this number? This is what's baked into the market. Quarterly earnings for fourth quarter compared to a previous year. If in 2 weeks this number is 7%, that's bad. If this number is 8%, it's good. This is a moving target during earnings. You need to keep an eye on this number. There are very few numbers I ask you to keep in mind. This is a number you need to keep in mind. We're all going to be focused on the CPI in just a few minutes. Here is what we're expecting, 3.3 and hopefully below 2.9. But the fact is, a worse number than a year ago is already priced into the expectation. And core, basically the same number. So the Fed can come and say, inflation has not gotten worse over the last year. Yeah, but why are you lowering rates with a strong labor market and if inflation is not getting better? It's called putting yourself in a corner. Contract, the three from a year ago, we can find loan losses as of this morning. You go, but can't find loan. Yeah, I'm not seeing big news on loan losses. Usually, when loan losses are higher, people pay attention to that. So let's continue. We got the CPI. Crude oil inventories are going to be on today. The beige book is going to be released today. That's this report right here at 2 p.m. That'll be really interesting. We have a 97% chance that the Fed is not going to take any action. I believe they should start raising rates. I've been only saying that now for 3 months. Nobody listens to me. But oh yeah, let me also post some links here. It's been a while. So we're having a inauguration class with all the gurus. So if you guys don't like me, but you guys like the other gurus, they'll be there. Or if you guys don't like them and you like me, I'll be there. Oh, my dogs are going crazy again. I'll be in my VIP room today. Now, I've got a very special class for you guys in the VIP room today. I'm going to talk about measured moves, your favorite topics. And I'm going to explain to you why I don't use ATR or measured moves and why implied volatility is the best way to predict what's going to happen in the future. I'm going to talk about that at noon today in my VIP room today. I highly, highly recommend you guys show up at noon. And here's customer service live. How would you use the beige book to your advantage, or does it matter? I don't think it's going to matter today with strong bank stocks. But it's a catalyst. It's a catalyst. It's something we have to pay attention to at 2 o'clock. I'm so grateful you guys can't hear it. It's a madhouse here right now. Europe is up a hair. They're digesting UK inflation data, looking ahead to key US inflation data. That's CPI. Real estate and utilities outperform. So you could see no tech stock love over there. China closed lower today as cautious sentiment prevailed, with investors awaiting of a lot of data. Tech, hardware, and pharmaceutical stocks led the decline. How random. Tech and pharmaceuticals. Japan closed slightly lower, giving up early gains as uncertainties about Bank of Japan's outlook kept investors. So basically, they're all just keying off of US. They're not hurting us. That's the key. They're not hurting us. And as far as overnight moves, the only stock that's really worth talking about is Adobe. It's up 1%. We can get a little bit of a tailwind from software as a result today. But this stock has been doing very, very poorly. Very, very, very poorly. Very, very poorly. So I wouldn't, to give you an example here, I would probably be using that as a key off to sell it again. See this? I mean, look at this. It can easily come right up to the 8-day EMA and the year VWAP right here, and then just come right back down. I wouldn't be, let's put it this way, I would not be buying Adobe with your money right now. Okay. All right. So let's talk about the stock market. Let's look at sentiment. All right. Let's look at sentiment. First things first. So you guys could see better. So I always warn you about these numbers. Let's go back in time. Do you remember this? This was coming into Friday. This is coming into Friday, okay? Coming into Friday. We had 517 stocks breaking down. I told you that usually after we have 500 stocks going up here, down here, one or the other, and you could see there's hardly anything to the upside, which makes it easy to find stocks that institutions are buying, actually, but that's a whole different topic. 517 stocks. Now, I told you, typically when the number gets to this level, we tend to bottom out for a few days. And what happened afterwards? Well, we came in on Monday and there was 247 stocks breaking down. Okay, what happened on Tuesday? There was 113 stocks breaking down coming into today. So right now, the number went from 517 stocks making a 90-day breakdown to only 113 stocks making a 90-day breakdown. Do you see how momentum levels? Do you guys see how momentum levels? Thank you, Dr. Serena. I appreciate that. Do you guys see how momentum levels declined over the last few days and why you should keep an eye on this number, or you should be coming here every day so you could see what this number is? Now, sometimes it goes to 600, but generally speaking, when it hits 500, momentum levels are just, they're a little overdone. So right now, coming into today, you only have 113 stocks breaking down and 52 stocks breaking up. Now, you still obviously have downside pressure outweighing upside pressure, but this is very minimal. This is very, I can't say this is random because it's above 100, but let's just say there's not a lot of firepower to the downside. The bad thing is, what I like to see is I like to see this decline like we've seen, but at the expense of this number. But nothing's happened to this number. In the last 3 days, since Friday, it went from 26 to 52. Okay, I mean it's better, but I would have liked to see 400. This declined by 400, and this increased by 26. Do you see the problem there? Oh, thanks for the heads up. Let's take a look. I got too involved in my shenanigans here. Let's see here. Here it is. So far, so good. But remember, yesterday it was so far, so good, and then yeah. Let's see. Oh, good. This is good. This is good. This is good. This is actually positive. So the core numbers no better than it was a year ago. I mean, it was worse than it was a year ago, but that's priced in. But core, see, the Fed can say inflation is getting better. Yay! It was 3.3, it's 3.2. It is getting better. I mean, if you want to consider this getting better. So this is better. This is better. This is a better number. This supports this is better than expected. Is it a lot better than expected? Let's not get overexcited right now. But this is a good report. This is a good report. We need this kind of report right now, you know? Look at the daily. We're already at the 8-day EMA here. This is moving up. Hopefully this trend will continue. It's a good report. It's better than yesterday. Look at yesterday. Look at yesterday. 4 versus 3.9, 3.5 versus 3.4, 3.3 versus 3. Yeah, until they revise it. But listen, this is what we're all dealing with here. So you could see the only number that was better yesterday was this, but the three, so 3 were better than expected, 3 were worse than expected, and 1 was better than expected. But look, core 3.5, that's bad. So producers are in a little bit of a worse shape. Consumers are in a slightly better shape. Now, before we get too excited, okay? Hey, Alexander, I haven't seen you in a while. How are you doing today? Before we get too excited, keep in mind, it's been a year, and this number is at 3.2 versus 3.3. So, yes, we're getting better. If you want to call it getting better, we are getting better. That's like, that's like the father of the kid with the bike making 30,000 a year, and he gets a raise, and now he's making 31,000 a year. It's better. It's better. But is it really better? Do you see my point? So yes, this number is better, but let's kind of pull ourselves back. Is this number a lot better? No. But it's better. It's better, and financial stocks are better. So I'm going to take the win. I'm going to take the small win today. Notice we're not as choppy either on TLT like we were yesterday. Remember, we rallied and then we just came right back down. Still moving up. I like this. I like this. Yeah, Jeff, but they're going to say core CPI is getting better. It's at 3.2. It's not at 3.3. I mean, if it was at like 2.5, I would be excited. But 3.3 versus 3.2. A year ago, years and years after COVID. So, I mean, it's better, okay? Let's just say this. It's better. Right, Stacy. It's positive. At least it's not negative. So you guys get it. You guys are a smart group. You guys get it. Let's look at the SPY real quick just to see. But I'm pretty confident in this. I like this. Yeah, this is good. 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 We got something to work with here. We've got something to work with right here. Again, is it really good? Eh, it's good. It's better. We're moving in the right direction. Hell of a lot slower than anyone expected. Okay. So momentum levels are positive. We're coming in this morning with only 113 stocks making 90-day lows. So we are not really in a strong drift, but we haven't really started the ascent yet. Something tells me that we're going to start the ascent today, and that this number is going to be a hell of a lot better tomorrow than it is now. But we still don't know yet, and it's still very early. And the beige book hasn't come out yet, although the beige book is not nearly as important as these earnings are. And so I want to tell you something bad, but I can't because I'm pretty happy about what I'm seeing right now. Less worse. Yes, Carlos, that's it. Less worse. Insurance going up off news, positive, at least not negative. Yeah, we're all saying the same thing. Jaden says price still going up over 3% from a year ago, but wages not increasing at the rate. Still squeeze on the screen. Yes, 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 yes. Absolutely, Jaden. It's better. It's bad, but it's not. It's bad, but it's better. Okay. That's probably the best way to explain it to you. So let's talk about sectors. Let's talk about sectors. So we have right now, if you were to look at this right now, I would say this is much better than it was a few days ago. The last couple of days we had downwards bias. Right now we have neutral bias coming into today minus the news. So if you take the positive news that came out and if you take the bias, I would say we have a positive bias. Now, I know you guys think Roger's bullish and he's very happy. I'm cautiously optimistic. That's the best I can give you, okay? Cautiously optimistic. But we are coming into today from a fairly neutral position. We're not coming into today. We need to know the whole picture. Well, Nathan, Nathan, look, it's been a year. We went from 3.3 to 3.2. I mean, is that really good, Nathan? Do you see my point? Is it really good that bonds are up here versus up here? So I'm taking the wins. I'm taking the small wins that we can. So the bad news is pretty much everything that you've seen till today. And today we're getting a little bit of a good news. I mean, I'm trying to give you guys this isn't like a math formula. We're dealing with living beings here. So you kind of have to take some like emotional value out of this. Does that make sense, Nathan? And I'll show you what I don't like technically, but choppy thumbs up market, rotational day, maybe some upside today, I'm cautiously optimistic. Okay, let's say this. Let's say on a 1 to 10, 1 being super bearish, 10 being super bullish. Yesterday, the day coming into this week, I was at a 3. Yesterday, I was at a 4. Today, I'm at a 6.5. I'm not at a 10. I'm not at a 9. I'm not at an 8. I'm between 6 and 7 right now. Okay? Hopefully that makes sense. And I'm trying to explain it as humanly possible as I can. Yeah, it might be an update, might be a nice update today. But I'm cautiously optimistic, and I'm not very cautious on technology. And I'll explain to you why next. So let me finish this. Let me show you. Let me show you better scenario. The glass is 60% full versus being 40% full coming into this week. Folks, I wish I could give you a better description, but I think it's humanly impossible to explain to you what I'm trying to explain better than I'm explaining. Okay? Yeah. I think you guys get it. I think we all get it. But here's what I don't like. I'm going to keep it a little bit. It's hard for you to see this, so I'm going to make it a little. So let me show you something that I don't like. So, it's hard for me to see it so big. Let me make it a little smaller. Okay. So these are the sectors. So remember, we want to see some balance between these sectors. Regular pop. Basically, what I'm looking for is a first day of a bull move today. And the closing today will tell me if I want to go between 6 and 7 again tomorrow, or if I'm going to lower that or go to 7.5, 8 tomorrow. Today is going to decide that. But I'm at 6.5 right now as far as bulls versus bears. I hope I can't, I mean, I can keep saying the same thing over in different words, but I think everybody here can understand where I'm going with this. Let me continue, please. This is important. So, so, so if what I think is going to happen, you're going to see a lot more love out of RSP than you will from technology, okay? Because bank stocks and financials are moving today, which is good. But here is the problem. Remember I told you how mixed we were a few days ago and even yesterday? Well, guess what? We're getting actually some clarity. Because why? Because we had a couple of down days. When you have a couple of down days, these things get a chance to settle down. Well, let me tell you what they're telling us right now. They're actually telling us that blue chips are leading, interest rates are mixed, and technology is the worst sector. Yeah. So the analysis that we started with this morning with financials and blue chips and interest rate sensitive stocks, that's all working out well, but technology is not leading right now. Look, you got consumer discretionary, communication services, QQQ, technology, Bitcoin, and semiconductors. Now, 2 years ago, Bitcoin was completely on its own island. I want you guys to know that. Bitcoin did not have a lot of correlation to technology. As Bitcoin is becoming, I'm having a really good session today. I hope you guys too. This is a great, no one's interrupting us. We're having a great class here. We got 547 people. Nice. So we're starting to get a little clarity on our sectors, and the way it's shaking out is blue chips, Dow blue chips, interest rate sensitivity, technology. That's okay. It doesn't mean technology is going to be selling off. It just means that we need to balance itself out. In order for RSP to balance out with the MAGs, this would have to happen, what we're seeing right now. So basically, what we're seeing right now can be interpreted two different ways. You can interpret what we're seeing right now as techs are beginning to sell off and the market's going to go lower, or we're seeing a rotation into other sectors, and that's exactly what I am seeing right now. I'm starting to see a rotation into blue chips, interest rate sensitivity, and then technology. Hence, for the next few days or for the next few weeks, keep your eye, and I started the show with the following. Keep your eye on RSP versus MAGs. RSP was up 0.81 yesterday. MAGs was down 1%. Right now, pre-market, MAGs is up 0.54. Let me just take a quick look at this real quick. Let me just see what's going on with the market right now. See, QQQ is up 1.76. Let's look at SPY. SPY is up 1.55. Let's look at RSP. RSP is up 1.40. So MAGs are still leading. MAGs are still looking good. But I am telling you, look at where the MAGs are. They're right at the 50-day moving average, and they're below these indices, where RSP is about to break through this level. So the RSP looks like it wants to come up, whereas MAGs look like they just want to consolidate at this area. So if we get an upside from everything, it's going to be great, which it looks like today. We're getting an upside from everything. But just keep in mind, the mega caps are no longer leading right now, and they haven't been leading. So don't go buying the Teslas, don't go buying the Microsofts. Don't do that right now. This is not the time. This is a time to get out of those stocks and start getting more into bluer chip stocks, okay? How is the index chart sorted by RS? It's sorted by this chart. This is sorted by 1 week high in relative strength, William. Good question. Yeah, I have 3 weeks, 6 weeks, and 1 week, and I use the 1 week usually. The 5 days. This is 5 day strength. So this is a very short term way for us to gauge what's and I don't really care too much about how much they're up or down. I actually care more about their relationship between them, as you guys know. I care about Are they fragmented? If they're fragmented, the market's going to be more like this. If they're directional, like they are a little more right now, we can get a little more upside. Because look, technology. Because logically, ask yourself this question. Okay, think about this. Common sense. Forget about everything I'm teaching you. Let's say communication. That's Google and Meta. Let's say they're bearish. Okay, and let's say that Amazon and Apple are bullish. So Apple and Amazon are really bullish. Meta and Netflix are real, or Meta and what was the other one? Basically, two FANG stocks are bullish, two FANG stocks are bearish. Do you think you're going to get a lot of directional bias? It's going to be like this because the market volume is going up into two and down into two. You understand? So you can't have that. So you need to have everything on board. So I am much more concerned with the relationship of these together than how much they're up or down. I care about which ones are leading and which ones are lagging, and I care about how the related ones are close to each other. And if you look at my TC 2000, actually, I'll show you something. I have it organized thanks to hold on a second. What's going on here? How come they're not popping up here? What's going on here? I'll show it to you at work, but you could see I have them organized here by different colors. Anyhow, the point is I'm expecting less from the mega caps than I'm expecting from the blue chips. But the fact that they're starting to come together means the market can begin trending. Because what's the market been doing for God knows how long? Look at this. I mean, this is how do you trade this? 2 days up, 2 days down, 2 days up, 2 days down. You see that? We need to break out above this level, which brings me to our next point. So we're starting to see a little less fragmentation here, which is promising. And we're seeing it right as we're approaching a key level, which is good. So I'm hoping that we have enough strength to break through this level, as I told you yesterday. I told you yesterday, we need to get above this level right here. This is our trend line. We need to get above 596, 595, 596. We need to get above this level. If we can't get above this level, nothing good is going to happen. But I think we will. And I think we're going to start coming up again. Okay? I'm hoping at least, but we need to come up to this level. And I'll show you why. We can be really strong today. Now, folks, this is where you want to put down whatever you're doing and listen to me. We can be hyper strong today, and we can even pretend to be strong tomorrow. And if we come up to this level, and if we don't break out, we're going to see a continuation of this descending flag. We're just going to see a continuation of this trend line. We need this to break clearly to the upside. Hard to say, Kevin. Should, theoretically, yes. But remember, we have a interest rate environment. So we have a couple of things we need to come over. And also, I'm kind of bearish on FANG earnings because they've been warning that things are getting worse for 2 quarters in a row already. Nobody seems to be talking about that. So we need to break. Nothing good will happen until we clearly break this on volume. And we haven't had volume for 2 days already. We need to break this on volume right here. That level is 596. QQQ. So don't get too excited just yet, okay? QQQ, we got ways to go. We got to break this level right here. So we got to break through 522 hard. Like, I don't want to just see us flirting with this level. I want to see us like hard, break it hard. I want to see this break hard, okay? To add VWAP for Inauguration Day? No, it wouldn't, Terrence. No. Inauguration Day doesn't tell us anything. There's no news on Inauguration Day. Now, why would it help us, Terrence? Do you not know that Trump is the president already? Is Inauguration Day going to change anything? Is it going to rebalance anything? Here, Election Day, right here. I got it right there in the beginning of the year. You don't need to put a VWAP on Inauguration Day. There's not going to be any price discovery on Inauguration Day. Let me ask you a question. What's going to happen on Inauguration Day that you don't know about right now? The answer is absolutely nothing. So where's the price discovery going to be? Okay. It's not about bars. It's about levels. It doesn't. It could be 50 bars or it could be one bar. This bar can go right here today, one bar. So it's nothing to do with bars, Rice. It has to do with levels. Ideally, 3 days, but I'm just letting you know it has nothing to do with days. It has to do with levels. So right here, 527, we're still bearish. We're still at the 50-day moving average. We haven't broken out of this. We can very easily today come up to this level or maybe even get stuck right here and come right back down. So my point is, don't go hot and heavy into today. I'll talk about momentum in just a few minutes. Yes, I did. It's right here. Look. Regendron, it's right here. Look. Right there. First trading day of the year, not January 1st. First trading day of the year right here. This is the election reaction. This is the quadruple witching. And this is first of the year or first day trading day of the year. No, nothing's going to change. You guys are just, I'm trying to give you real value here. You're just speculating on stuff. No, there's no reason to put a VWAP on inauguration day. Inauguration is just a confirmation. That's all it is. We already know who's going to be the president. That's already been decided. The market's priced that in a long time ago. The market knows who the president is. Okay, let me just explain that to you. All right, so we got to come above these levels. So my point is, don't get so excited about this morning's move because we can get stuck. We can get stuck very easily. See right here, RSP, we got to break above the 50-day, the 100, and then we got to break through the 50. We got to get above 180 on RSP. IWM, thank you, Rice. I appreciate it. We got to get above 230.67. Why am I so cautious about these crazy levels? Let me show you why. Because you have 49% of stocks trading below the 50-day move, the 200-day moving average, which means we're in a bear market. So we have to prove that we're not in a bear market. And for that to happen, we need to see real strong price action above the key moving averages. Let me give that to you on the QQQ too. So I hope you guys have been writing these numbers down. Right here, we got to nicely break. I'd like to see us at like 530. And if we get momentum, we're going to get momentum. Now, one thing that's good is we've been seeing higher volume on QQQ, but price action sucks. How do you make money in a market like this? You go short, you get stopped out. You go long, you get stopped. It's very difficult. I've been really going out of my way not to give you guys trades. I've been really going out of my way. I've been working really hard not to give you guys trades. Okay. That's all I could say last couple of weeks. For your benefit, by the way. All right. What's with the level on IWM here? That level on IWM is right here. Right here. Which happens to coincide with the election VWAP and the 50-day moving average. It's about 231. And trust me, if you don't get in here and you get here, you're not going to miss anything because if it comes up here, it's going to come all the way up to this level. That's the next test right here. Jeez, why is this so difficult? Okay. So if you can come up here, we can probably come up here. Carlos, I'm up 92% because of you this month. Nice, Carlos. I'm glad to hear that. That's nice. I'm going to put that in my testimonials. Hold on. One second here. Where the hell is my testimonial? Who moved my testimonial? Here it is. All right. Eagle Beagle says if you had given trades, we would have been punished in these markets. Yes, you would have been punished. You would have been chewed up and spit out, Carlos. Let's look and see what the stock market's doing right now in real time. Holding on pretty well here. Bond market should be holding. Yes. See, this is what we got a doji sandwich right here. Got a doji sandwich. This is a doji sandwich pattern right here when you have a doji in between two trend bars. And then we went higher up. I'm loving this. I'm loving this. I'm loving this. See, no, remember yesterday after this bar, we went right down here. Notice today continues going up. That's what I'm talking about. Nice, nice, nice. But look at where we are on RSP right now on the daily. Look, look, we got to break through this, and then you have to break through this, and then you have some upside. Got a lot of resistance here. That's why I'm saying the next couple of days are going to be crucial. Crucial, I tell you. Crucial. Man, I get too much into this. All right. So sectors have a little bit of non-fragmentation. We have some directional bias. We don't have we don't have the bulls versus bears really like overdoing us. That's been cleared up in the last 2 days. Right here, you could see that right here. Now, I want to ask you guys an interesting question. This is the first time I'm going to ask you this question. Many, many months ago, I told you that if you continue watching me do this every single day, you're going to start developing a very intuitive, mechanical sense for how the stock market works. For those people who've been here with me, and I know that I see the same names every single day, the people that are here every day, that see me doing this, are you guys starting to get a three-dimensional understanding of sectors, strength, relationships, values? Basically, are you starting to see the market from a completely different perspective than you saw before? That's my question to you. Are you seeing the market from a different perspective than you're seeing it before? By the way, we have almost 600 people here right now. Not today or tomorrow. Generally speaking, are you now starting to see the market? Hey, what sector is related? Is momentum moving higher? That's what I want to know. I want to know if what I'm doing is actually helping you guys become a better traders. Let me know. Let me know. Am I opening your eyes to stuff? It's eye-opening. Good, Mark. Good. I've been here for 2 weeks, and this is great stuff. Absolutely. I love the ongoing movie. It's a movie. Yes, Dave. Exactly. It's a movie. I'd love to see how you out your watch list together too. I'll do that. I'll do that sometimes. I think it'll be fun for me to do that with you guys. David, absolutely holistic picture instead of just shorts and longs. Yes. It's okay, John. It's all right. Good. Good, 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 good. Okay, cool. Got to capture and preserve. Clearly for sure, but I have so much to learn. You're welcome. Good. Good, 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 good. Wow, the feedback is fantastic. Fantastic. Thank you, guys. All right, so now let me give you my stocks. Now, remember yesterday, I told you yesterday, I think it was the first time I actually said this. I was struggling yesterday. I was struggling yesterday to, I was really struggling yesterday to come up with a list of stocks for you. Didn't have as much trouble today. It'll be much easier tomorrow if the market continues moving. Look at how we're already above the 100-day. I'd love for us to get past these levels. I'm going to write down these levels for you in the Telegram channel today, so you have them. So you have them for all the. In case you didn't write this down, I'll send you a Telegram with all of these levels. Okay. Good. 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 Dramatically different view of the market. Good, good. That's what I wanted to hear. All right. Stocks to the downside. It was easier to find stocks. It wasn't easy, but it was easier. Cooper Companies. VKTX. I'm going to be late for work today. VKTX. The spreads on this stock are crap, so you'll have to do a debit spread. Okay. Helping me narrow my focus down to specific strategies. Good, 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 good. I'm so glad that this is helpful to you guys. Guess, I mentioned this stock yesterday. Still bearish on this stock. KSS. Now, you'll notice some of these stocks are the same stocks from a few days ago. That's okay. We stock the same stocks. There's just there's not as many stocks to choose from right now. That's because markets are are doing this, or they've been doing this. The more they do this, the less stocks. The more they do this, the more stocks. Now look at this baby. Look at Dollar General over the last. I mean, look at this thing. Just go straight down. Look at this thing. Talk about non-choppy, right? That's something. Look at that trend. That's a beauty. That's a beauty for you. BBY. I ordered a computer from them. Somebody ordered a computer from them. They promised to send it out, and then they sent us a letter yesterday saying they don't have it in stock. So my computer burnt at work. My video card went out. They ordered me a new computer. Best Buy said they can get it done fast. Total flakes. Very choppy, but beggars can't be choosy. If you do something like this versus something like this, buy more time with options because you have more chop. Okay. Yeah, this looks really good. I like Dollar General today. BIIB. Woo! Look at that, Dr. Serena. 600 before the close. Love it. BIIB definitely looks very bearish. RNA. I'm trying to give you the least choppiest stocks that I can find, okay? You too, Stacy. Yeah. So folks, be careful ordering from Best Buy right now. They're having some shortages. Let's now do the long side. JBL. First time that I'm ever giving you this stock. Not. UAL. First time I'm giving you this stock. Be careful. It's a little overdone right now. Wait for it to pull back. ALGT. Interesting stock. Very nice chart. Very, very, very nice chart. Like really nice chart here. GMED, look at that. Compression, 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 breakout above all the stuff on volume. Not bad. Geo. A little overextended. I would have preferred to buy it right here. But again, if it comes back down here, you've got something to work with. Bros. Yeah, I'm not an Apple guy, guys. I'm definitely not an Apple computer guy. A little extended, but still something there. I am not an Apple guy. I am a PC man. Roblox, beautiful stock. What a beautiful stock. Eat. What a beauty. Look at this. This is a perfect compression breakout. Folks, take a screenshot of this. This is what a perfect breakout looks like right here. Look at volume starting to move. Compression, breakout, no choppiness. That's a beauty right there. I can't believe I'm giving you these things for free. TPR. Look at that breakout. Ralph Lauren. Little sloppy, but looks like it can be coming up here. New to service. Are you advocating credit spreads to play or choosing stocks in general? No, I'm not, Mark. But I will be talking about credit spreads today. I have one program only with credit spreads, weekly cash flow. I'm not big on credit spreads. If you really like credit spreads, Jack Carter is really great. I'm pretty good, but I'm not huge on credit spreads. One program with credit spreads. All right. Before I leave, remember I have a class at 1 o'clock. And I'll be giving you with a bunch of other guys. This is a big class where you can get opinions from everybody else. I'll be there too. I'll be in the VIP room today. And and let me give you customer service live. Hopefully you guys enjoyed this show. I will see you guys at noon in my VIP room. Here's the link for that. Again, don't miss out. I'll see you guys soon. Have a great day. And if you have any questions, roger@rogerscott.com. Bye, guys. Thank you so much for being here. It was a fantastic class. Thank you.